Hey friends, welcome back. So today we are talking about 100% financing program when it comes to buying a home. I'm super excited to have Angella Miller. She is phenomenal. She's with Simmons Bank. I want Angella to tell us a little bit about herself and give us all the fun and the scoop on how to qualify for this 100% financing program that can really be a game changer for some of these buyers out here. All right, Angella, tell us a little bit about you.
Awesome. Well, thank you, Keyra. Thank you for having me on. And once again, I am Angella Miller. I am a mortgage loan originator. I have over 20 years of experience. I specialize in first-time home buyers and low to moderate income earners, although I do mortgages for all types, jumbos up to 2 million. I'm here today to tell you a little bit about a special financing program that I have available. It is a 100% conventional mortgage with no mortgage insurance.
How
can you do that? They say yes, 100%. So right now, within the DFW area, I have a program that's available to certain counties, and that is where my offices are located. And that would be Dallas County, Collin County, Johnson County, Tarrant County. And how can I do that? That is because of a CRA law. I am required to lend to low to moderate income earners who may have a little difficulty coming up with down payment. So I try and help facilitate that by a special financing program called the 100% Conventional Finance Program for low and moderate income earners, or if the property is located within a majority minority, that is 50.01% minority population. That's any type of minority.
Okay, and let's break that. And let's break it down too, because we want to make sure that, like, if we're talking to people who are first-time wanting to be first-time homeowners, they don't know any of this stuff. So, one thing that I love is that it is 100% financing, and so with that being said, can we talk about first what the criteria is to qualify for that? And then you can kind of break down like how you would actually qualify, I guess. I guess it's the same question.
So the criteria would be, first of all, you would need a minimum of 620 credit score. Okay. So that's not a hard hurdle. So we look at all three bureaus, TransUnion, Experian, and Equifax. Take your middle score. That mid score needs to be a minimum of a 620. If there are more than one borrower, the lower mid score. So if you and I are purchasing together, all three of your scores, my scores, the middle score, the lower one needs to be at least a 620. That's okay. Step one.
Okay, so with that step one, I know a lot of people get it confused because they say, okay, middle score, so whichever one is in the middle. No, it's actually whichever one falls in the middle. So if you have a 610, 620, 650, you'd go with the 620.
Exactly.
Not necessarily like whichever one actually
lands. Which order? No, it has nothing to do with the order that they're in. So we throw out the high score, throw out the low score, go with your middle score represents the entire file. Okay.
Awesome. Okay.
So once we have achieved a 620 credit score, that is step one. Mm-hmm. And then for those areas, if your income is 80% of the AMI, which is area median income, census comes around every so many years and they take account of what's the average income. So 80% of the average. So for Dallas and Collin County, that would be if your income, the qualifying income is $71,200 or less, you can purchase any home in that within those counties, Dallas or Collin County. If your income is over that, but it goes all the way up to $106,800. So I'm able to help a lot of families purchase homes. If you're in between that gap, over 71, less than 106, then you can also use this 100% financing option, and you would use it within the majority minority areas or a moderate census tract if the area itself has a moderate income level. So right now for DFW, for the Dallas and Collin County anything in South Dallas qualifies. Anything in Lancaster, Cedar Hill, all of the lower cities within Dallas
The South
County.
cities.
The South cities, correct. And so that same concept works for Johnson and Tarrant County. Those levels are different. I can get into, I don't want to get too granular, but at the end, I'll give you my contact information. If you think, first of all, if you have a 620, you're looking to purchase a home, I can probably help you. We have so many programs available. I can probably help.
For sure. And so I wanted you to break down, because I know sometimes people get confused. When you said a minimum, you have to make a minimum of 71,000, correct? And you can't make more than 106,000. Is that what you were saying?
No, so not a minimum. So if
there is no minimum.
There is no minimum.
Okay. That's kind of
what I will qualify you. Correct. I will qualify you based upon your income for whatever amount of home you can qualify for. But if your income is below the 71.2, then you can, whatever you qualify for, there's no limit on the houses that you can choose. So you can choose any house. It doesn't have to be majority, minority. It can be anywhere.
Okay.
But if it's over that 71.2, but less than 106, then you can still use the 100% product, but you're going to be limited as to where that product will work. But it's still a wide area.
Awesome. And I think that's probably what most people, that makes sense. So if you're below that 71, you can pick any home in the counties that you said. But if you're at that top of above 171, you have to be very particular in the area, but you could still use the program. I love that. Okay. So 620 credit score, anything additional? I mean, income, you can't make more than 106, anything additional that they would need to have or not have to be able to qualify?
Well, we look at, so how we qualify you is we look at your past credit history. We want you to have a minimum of 3 active accounts that you've had active for at least 12 months, one of them being rent. So we would prefer, if you are paying rent, we can qualify you typically at or close to what you're paying for rent where you can actually own.
That's awesome.
I know, right? So rather than paying someone else's mortgage, you actually get to participate in the appreciation of the property, which is happening. So that would be great.
And I always say to you, like, own or be owned. And so like, that's so great that you can qualify them for their rent price, because that's what people say. They like, well, if I'm going to pay this much for rent, can I pay that much in mortgage? Yes. She's telling you now that you can. Yes.
Typically, yes. So, but qualifying for a mortgage is a little different than what you go through to qualify for rent, because we're looking at the long term. So we're looking at debt ratio.
Yes.
So what that means, so debt ratio, what does that mean? Debt ratio is the amount of your qualifying monthly income times a certain percentage. We don't like for you to spend more than 43% of your income. So for round numbers, let's say your income is, let's see, 71,200 a year would mean that your income is 5933. You may spend a total of 43% to purchase the new house and all other debt.
Correct.
I have a single qualifying ratio. So what that means is if you have no other debt, credit cards are, $5 minimum payments, that's all we'll use. And you can spend all 43% of that income, which would end up being $2,551 is your maximum outgo of debts and bills for this program. So let's say you have a couple credit cards and they're $5, $10 a piece. Cars paid for. So if I were to subtract, say maybe $50 in other debt, I would qualify you for a house that is a $2,500 housing payment, probably more than you're paying for rent. That's awesome.
That's awesome.
Since there's there's one qualifying debt ratio. However, if you have lots of debt, you want to try and get your debt down to a minimum to at somewhere around 15% of your income. 15% of your gross would still leave a large portion available to purchase a home, because as you and I know, the housing market right now is really booming and you want to spend as much as possible. I know it's bananas.
It's bananas.
Oh yes. It's bananas. So you want to try and get your debt ratio down to like 15% or less. 0 is great, but up to 15-20%, that's still doable. You'll have enough available. You can actually qualify for a mortgage in this program.
Awesome.
And let me just tap on. Some may have questions. What do you mean when when you say 100% financing? That means if you find a house that's I've qualified you for $275,000. You find a home for $275,000. I give you a loan for $275,000, as opposed to other programs that require a 3% or 3.5% or 5% down payment and then closing costs on top of that. This conventional program does not require a down payment at all. So all you are paying is closing costs. And that's going to average about 3.5% to 4% is what your closing costs will be. And that, that covers everything. And you start paying that the minute that you write your earnest money check, that you're starting to pay your closing cost.
Yes, and earnest money does go towards closing. Same thing with option period. The only time it would be different is if you did new construction. New construction, you would just do a deposit, and then you would in the closing costs, you would have a little bit more because you didn't pay as much upfront. So yeah, I love that, and that is a question I was going to ask. Honestly, those are all the questions I wanted to know. What it took to qualify. I also wanted to know what 100% meant, so people understand that and know the difference, that you don't have to pay a down payment. It's only closing costs, which is super awesome. And know that there is a way to buy a home. And I think that it's always best to reach out to you to get a little bit more information, because everyone's situation is different. So Angela, do you want to tell them one more time how they can contact you and get a hold of you, so they are able to make home ownership a reality?
Yes, please make home ownership a reality. You may reach out to me. My contact information is you may email me at angella.miller@simmonsbank.com. And Angela is spelled with 2 L's, ANGELLA.Miller, MILLER, @simmonsbank.com. I'll be happy to reach out.
Sorry, go ahead.
I'm sorry, go ahead.
No, go ahead.
No, and you may also, so you will find my contact information below. I believe there will be a link. So please give me a call. I'm happy to answer all of your questions that pertain to your personal criteria to help you get qualified.
Love that. And I'm going to put all of her information down low in the description. So please reach out to her. Go ahead and get pre-approved. Once you're pre-approved, that's when you come to me. So step 1 is pre-approval. Step 2 is let's go house shopping, guys. And you know my journey. It is to help millennials and first-time home buyers and sellers create generational wealth by buying, selling, and investing in real estate. So I'm super excited. Thank you, Angela, for giving us this awesome value. If this video has brought you value, smash that like button, hit the subscribe button, and we will see you next time. Peace. Thank you so much, Angela.
Thank you. Bye-bye.
Bye.
Oh my gosh, there she is. It's Keyra Ford. Keyra Ford. You don't know what? Never heard? Oh my gosh, she's played every time.